Ladies and gentlemen, this is Christopher Aaron. Welcome back. It is December 5th, 2019. A week from yesterday, there is a Fed meeting coming up, so let's get ready. We'll look for that next week. In this video, I wanted to cover the silver market. Let's have a silver update and also update the silver miners. I think this is it. I think we're getting close to the bottom of this correction if it's not already in. And I think this is a major opportunity for a surge setting up into 2020. That's how I'm looking at this market now. And so let's take a look at this. And I just want to let you know in the second half of this video, sometimes I have people ask, well, what is a good silver miner to invest in? And I usually don't discuss the individual picks that we're making here. In this video, I'm going to make an exception to that. I'm going to give you one of the picks, one of the silver mining companies that I think is going to leverage silver prices over the next 6 to 12 months. And you can consider whether or not you want to take a stake in that with us. So let us start by looking at gold and silver over the last 3 days. This is very, very good price action. By the way, premium subscribers, there was a flash update that just went out to you where we're looking at gold and the gold miners. We're not going to cover that in this video. Please check your inbox for that. But this is very good price action here for gold and especially silver. Oh boy, it doesn't look like much. You know, it looks like, well, we had a nice day on Tuesday and then that was all given back yesterday. And then only an anemic recovery today. This is how it looks from the 3-day chart. What we like to do is compare this to a broader perspective. So let's do that and see whether or not we can get any confirming or denying indicators for this. Because I think this is setting up really well. I'm talking right now. Right here in the beginning of December. I can't tell the exact moment when this next surge is going to start. But it's getting close. And so here's one of those things that I'm looking at that is, so just to let you know what we're talking about here, on the top, this is a basket of silver mining companies. This is the SIL fund. This is a basket of about 35 of the largest silver mining companies in the world. These are their valuations. And here is silver itself. We're using the SLV. This is a paper fund. I'm not necessarily recommending to own this. I like the physical metal if I'm going to do a one-on-one for a long-term silver investment. But we're looking at this here for comparison purposes. And just look at what has happened here over the course of the last week. This was the big drop on Wednesday where it basically gave back all of its gains for the last week on the silver price. We saw that. But look at the silver miners. They had this initial little sell-off, but then they actually finished positive for the day yesterday and continued upon that today. So look, it's like we're making a new high here for the move in the senior silver miners that derive their profits from this metal. And here we are at silver. We've, come down and made a new low for this week. When you see a divergence like this is like, hello, if you know this movie, what I'm talking about, Bueller, it's like we have to pay attention when signals such as this, by the way, that was Ferris Bueller's Day Off, a great movie from the 80s. We have to pay attention. We can't be like Ferris Bueller himself not paying attention. Look at this divergence here between the silver miners, the senior silver miners, and the price of silver itself. So something is happening here that's telling me that the large cap companies, they do not believe this. This is really good to see. So let's kind of expand this comparison and take a look at what I am thinking is about to be setting up here. I'll show you some reasoning for this. This is a 3-part chart. We're looking 2015 through the present. In the middle is the price of silver. Okay, here's where we are right now. We've closed at $16.92 or so. That was the close yesterday. On the bottom, we are looking at those same silver mining companies, 1-for-1 ratio. And on the top, we're looking at these two in ratio format. So understand what I'm talking about here. When the ratio of the silver miners to silver is moving higher, this is showing that a relative speculative interest is coming into the entire silver sector. It shows us that, relatively speaking, when the silver miners are outperforming the price of silver itself, think about who invests in silver miners primarily. It's people that are looking to leverage gains in silver, right? So relatively speaking, the silver miners are more risky than the price of silver. Silver miners can go bankrupt if they're an unfortunately managed company, whereas the price of silver will never go bankrupt. And so therefore, when we see the ratio of silver miners moving higher versus their very own product, it's showing us that speculative interest is coming into the entire silver mining complex, okay? That's the major takeaway. So look at where we are right now and look at what is going on. There's been this 18-month base here where the ratio between the silver miners to silver has moved sideways, and it's just making a poke at breaking out right now above this 18-month bottoming formation here. You could call this an inverse head and shoulders. You could call this a base. Either way, it's an 18-month bottoming formation, and it's just breaking out right now in the ratio. And you say, well, who cares? Who cares if the ratio is breaking out? You know, I don't care about the silver miners, or maybe I don't care about physical silver. Here's why you should care no matter which one you are investing in. Look at the last time that this ratio had a significant breakout. Now this chart, we're starting this from the bottom in silver. This was the 1365 bottom in late 2015. But there was a base here that set up for most of 2015 before the chart. And that base was broken right here in February of 2016. Right here was the breakout. What happened the last time that there was a breakout from a year-long, and in this case it's even longer, base? So look at what happened. When there's a breakout from a base in this ratio, and we see a surge higher in the ratio, the silver price itself rose by 55% on this signal. So if you're a stacker and you say, I don't care about the silver miners, fine, to each their own. But when we see the ratio breaking out here upward, that is good for the physical silver price. That's what I'm trying to show you. And we're seeing that again right now for the first time in the last 3.5 years. Secondly, if you are in that more speculative crowd, if you're saying, hey, look, 55% is great, but what about this? What about a 270%? This is what happened to the senior silver miners if we're measuring from the bottom to the absolute top. And of course, no one bought perfectly at the bottom nor sold at the absolute top. We're just looking at what were the absolute values here of this gain. This is the signal, and it's like, hello, guys, come back to the present. Look at where we are. We are seeing an 18-month base here. It's longer than the base that broke out here. 18-month base, and this thing is ready to break out. I'm talking now in this ratio between silver and the silver miners. So what are some of the ramifications? How about this? Let's play it conservatively. Let's talk about if this surge sets up and we just get back to the 2016 highs. No more than that. If we get back to the 2016 highs from silver where it is right now, just below $17 an ounce, that will be a 25% gain in the price of silver. I could see this happening within the first 2 quarters of 2020. So I don't think you have too much time. If you have no silver exposure right now, I don't think you have too much time to be messing around here. So again, we're talking about this conservatively. Back to the 2016 highs only. We can talk about a whole lot of other higher targets perhaps when we break this. Let's play it conservatively. Let's not be these silver going to $500 an ounce guys, right? Let's just talk about $21.25 for crying out loud. 25% gain in the price of silver. That would put us, relatively speaking, across the large cap silver miners at a 70% gain. Okay, so if you ask me, the silver miners are significantly undervalued right now. These are the large cap miners. Here's where we are the silver miners to silver ratio, silver and the silver miners itself. We just looked at how the silver miners were not believing that recent decline this week in the price of silver. Here is how that's playing out when we look at a 4-year comparison of the ratio, okay? Really important stuff if you are in the silver market to be paying attention to these ratios. So, as I said, I wanted to give one specific example here. And why am I going to do this now? So, for full disclosure, the equity, the stock that I'm talking about, is a stock that I already own. And it is a stock that I think is going to go much higher in this move that's coming up with silver. And so why am I giving this away now? Well, it's because I think if I give this away, and perhaps over the next 6 to 12 months, some of you guys see what I'm talking about with this move, I think that this could be good for all of us. Let me just say that. I have plans coming in 2020 to be expanding what I'm doing into other commodities. And I think that if you see how this works for silver, there may be some interest in other commodities. And furthermore, if we can all share in some of these big wins, I think that comes back to help us all in the future, myself included. So that's all I'm doing here. The research behind this company looks like this, just so you know. This is the kind of research that we do. It's a combination of technical and fundamental research, as you can see. But I'm not going to get into all of this. I'm going to give you the quick takeaways right now. First of all, what is the company's name? It is Impact Silver. And let's talk about this. So, Impact Silver is a renegade in the silver mining world. Here's why. This is a Canadian-based company. They're based out of Toronto, Canada. Their mines are located in Mexico, which is an extremely safe jurisdiction to be producing silver. A lot of major silver miners are based there in Mexico. Impact Silver has 3 operating silver mines. So this is a junior producer. This is one of the most highly leveraged categories of companies that you can see in the world. Impact Silver has no debt, which is something that I like. So, even if the price of silver goes lower, the company is not going to go bankrupt because they're not going to miss debt payments. Okay, so some companies have to be really careful for this. If you think about it, the problem with some silver miners is that even if the price of silver just goes sideways for a period of time, and let's say they're marginally profitable, if a debt payment comes due that they can't finance, a company can go bankrupt. I've seen this happen before. Impact Silver has no debt, so they should survive if there is a period of grinding and we're wrong on the surge coming immediately. As I said, they have 3 active mines. Now, what makes them a renegade? I'm talking fundamentals here, and we're going to talk technicals in just a moment. Let me just tell you, what makes this company a renegade is that they do not publish resource estimates. Okay? Most companies, they publish the amount of gold or silver, in this case, that they think they have underneath the ground. They publish resources and then what are called economically proven reserves. Okay? And both of these categories of resources and reserves are worth different amounts to mining investors. If you can show how much silver you have sitting in the ground, that's great. How much silver do you actually have that's economic to mine at present prices? That's even better. Impact, as I said, is a renegade because they skip all of that. And there are certain people that will tell you, well, that's too risky because we don't actually know what they're sitting on. And then there are other people that will tell you, well, they've just saved, a couple $1 million because they're not messing around, spending a year and a half publishing all these studies every time. What do? They actually just go in, they stick their drills in the ground, and they dig the silver out of the ground, and they show you the results. Impact Silver has gone from 0. So you say, well, what are the results? And if you look up here, I know it's a little bit hard to see, so I'll just read it for you. They have gone from producing 0 silver in the early 2000s up to almost 1 million ounces of silver as of 2017. They're down slightly over the last couple years, but that's because silver prices have fallen and they've curtailed production. They've brought production back down to about 750,000 is their range expected for this year. And if you ask me, that's wise. Why? Because their cost for extracting that silver is around $16 per ounce. So think about it. We're barely above that number. Silver had fallen all the way into the low 14s just a couple of months ago. And so it was not profitable for them to pull their silver out of the ground, so they curtailed production. And you guys have to think about this for a second, and I'm going to move forward here to show you that this is sort of the proof is in the pudding kind of a statement. And you say, well, this company is digging silver out of the ground for about $16 an ounce, plus or minus. And right now they're selling it for just above $16, almost $17 is the spot price of silver. So they are barely profitable. This is the thing to keep in mind. They're barely profitable. So you say, well, why would you want to invest in a company that's barely profitable? Aha, here is why. It's because a company that's barely profitable at present silver prices experiences the most leverage if silver moves higher. Not the company, there's some other great companies. We could talk about Pan American Silver. We could talk about Wheaton Precious Metals. Wonderful company. I've met Randy Smallwood, the CEO. I've spoken with him about their operations. It's a great long-term hold, like a Wheaton Precious Metals, for example. But I will tell you what, Wheaton Precious Metals, let's say silver goes back to $21, which is all we're talking about right now. Wheaton Precious Metals might go up 20%, 30%. They are not going to do what Impact Silver did here in 2016, which was to literally, I'm rounding this, go up by over 1,000% amidst just that 55% move in the price of silver. This is what can happen to a silver mining company that is barely profitable, that goes to extremely profitable in just a few dollars move in the underlying price of silver. Of course, that leverage works on the down way. You can see this. Down 96% during this decline, right? Down 84% during the decline over the last 3 years. And you say, well, we had a 96% decline, 1,000% surge, 84% decline. Are we getting ready for the next major surge? Let's just look at some potentials. If Impact Silver, and this is the same company, plus or minus as per production profile here that it was in 2016. So if silver gets back to that 21 level, I expect Impact Silver to rise back to 2016 levels in the $1.25 per share range, which is a 275% gain from present prices. And again, remember, that would be with a 25% increase in the price of silver. So certainly a leverage possibility to be talking about here. If silver goes back to that $50 level, remember where it was in 2011, I would expect Impact to meet or exceed its peak from 2011, which was above $3 a share. That would be 840% increase from the recent close here around 33 cents per share. So there is major leverage to be attempted here when we're looking at these silver miners. And remember, premium subscribers, we have an update on the gold miners that just went out to you. It should be in your inbox now. But I wanted to give you guys one example here of companies that we are investing in. You can follow this for the next 6 to 12 months. Please be wise. That's what I want to say. The mining business is risky. Problems happen with mines all the time, and great things happen with mines all the time. But do not invest more than you can afford to lose. Remember that example. The physical metal is not going to ever be worth zero. Individual companies can go to zero, but they can also go higher by 1,000%. So there is possibility here. I want to encourage you to really think for yourself about this possibility. Please let me know, by the way, if I can help you in any way to think about this in a more clear kind of way. We do offer a premium service that contains videos just like this for members. We also cover not only what's happening with silver, but with gold, with the US dollar, and the US stock market making a very important move right now. As I said, the flash update went out on the GDX today to premium members. We also talk about not what we're buying, but when are we selling. This and more goes out via every type of alert that you can imagine. If you would like to speak more one-on-one with myself, please know you can reach me by the Consultations tab on the website. I charge a fee for my time because I have many requests for my time. That way I can dedicate time to you personally and give you independent, this is what the I in I Gold Advisor stands for, independent analysis of the precious metals. I don't have to try to sell you anything. I have some clients and, we go through their holdings and I say, look, I would not be buying more gold or silver if I were you, right? So I don't have to try to push people in any way. No, you can reach me on the Consultations tab if you're interested. If you would like to continue following these free videos, make sure to hit that red subscribe button. And if this works out with Impact Silver and you get a nice gain from this over the course of the next 6 to 12 months, nothing is guaranteed for tomorrow, but over the course of the next 6 to 12 months, and you would like to say thanks on Patreon, I very much appreciate your support. When we look, just to go back to the beginning of this video, we looked at the divergence between, remember, we were talking about the large cap silver miners versus the price of silver. Those large cap silver miners are flashing a loud signal right now that they don't believe that recent little drop in the price of silver. And so, there's very different questions to be answered here. If you are just approaching the precious metals for the first time in your life, and you have no silver exposure whatsoever, then this is probably a good time to be starting to make some purchases, especially in the physical metal and maybe some more conservative silver miners. That's what that signal is telling me. And of course, you have to keep following this as we go along. If you have a lot of physical metal already and you're saying, like, I have enough, this stuff has taken up the whole bottom of my closet, or, I got a safe somewhere and it's exploding, for crying out loud, then this may be the time where you say, you know what, I have enough physical and it's time to get into the silver miners because we're seeing that signal. Think about it, make your own decision, let me know if I can help you.